Congratulations yet again on your big win. Today you're going to discover 5 easy steps to double, triple, and maybe even quadruple your earnings when you win every day this week. If you'd like, go ahead and click on the link below this video and download your free win checklist for guaranteed profits, then print it out so you can follow along. That way, if there's anything you'd like clarified, you can just scroll down and post your question in the comment section on this webpage, and we'll get back with you as soon as possible. Hi, I'm Chris Verhey, and I feel honored that the affiliation of Financial Newsletter Publishers asked me to do this training series for you. And because I consider it such a privilege, I'm determined to over-deliver and exceed all expectations. There's yours right now in this video. In video 1, I showed you how 6 profit-driving advantages put weekly options in a wealth-building league of their own. I proved to you that WIN is scientific, it's methodical, it's virtually automatic, and you saw that true to its name, WIN can pay you a fantastic weekly income right now. In video number 2, you witnessed for yourself how every Friday presents multiple opportunities to earn as much as 1,000% return in a single day, hence the name Grand Slam. And I showed you step by step what to do on Friday if you'd like the chance to earn profits like these for yourself. And finally, in video number 2, you saw that if you did only one Grand Slam trade a week, you could potentially grow $3,000 into nearly $30,000 in just 12 months. That's a whopping 887% return after commissions without compounding. I think you'll agree that the first 2 WIN training sessions contain more eye-opening, action-ready trade secrets than many courses costing hundreds of dollars. And now, in this third video, I've decided to kick it up a notch and reveal every strategy in my WIN playbook, so you can win 5 days a week. First, let's take a look at the lit fuse. It profits from stocks that have been too quiet for too long. Here's the lit fuse trade setup Richard mentioned in video 2. Now, don't let the prices confuse you. At the time, MasterCard was trading at $600. The prices you see here reflect the recent 10-for-1 stock split. Anyway, as you can see, MasterCard is a stock that typically trends, but remaining within a narrow trading range for days on end is not MasterCard style. And I knew it couldn't last for long, so on the weekend update, I notified subscribers that MasterCard was a lit fuse ready to soar. 3 days later, MasterCard broke out, gapping up $22.80 to open at $623. Then it went screaming south to a low of $565. On Tuesday, you could have purchased an at-the-money straddle consisting of the $600 call and $600 put. A straddle is a call and put with the same strike price with the same expiration. The call would have cost you $9.20, right? The put, $7.50. Then on Wednesday, you could have cashed out on the call at the opening price gap. The high was $26.31. Your cost was $9.20, and 100 shares per contract, that equals to a profit of $1,711. Not bad for half the trade, right? When the stock crashed, you could have sold the put for $31.55. Your cost being $7.50, and again, 100 shares per contract, that equals a profit of $2,405.
Last week, Chris wrote about Tesla being a lit fuse. So on Tuesday, I bought 20 calls for 60 cents, which I sold that afternoon for $7.30 to lock in profits. Then I bought 10 more calls for $1.17, and they hit my $5 target the next morning. Overall profit, $17,250 in 2 days. Profits like this allow you to accomplish some pretty spectacular things. Pay for college, own a vacation home, whatever. With a wife and 2 teenage kids, money is flying out of the house all the time, so I try to use this income for extras. Like, my daughter's going off to France with a high school trip, and I paid for half of it with trading profits. I'll probably use my Tesla profits to buy a new car.
A college education for yourself kids or grandkids, a new home or vacation home, the car, boat, or motor home of your dreams. Like Brian said, there's no end to all the spectacular things you can win. The next strategy I want to talk about is the knee jerk, which cashes in on overnight price gaps. A few minutes ago we talked about how a 600 straddle for our MasterCard lit fuse had huge profit potential for both the call and the put, because after the initial gap up, the price plummeted an equal distance below the straddle before it eventually returned to normal. And this kind of knee-jerk reaction to gaps happens all the time. The cool part is when prices gap up, you can suddenly buy at-the-money puts cheap and out-of-the-money puts even cheaper. Look, here, the 625 at-the-money put was selling at $25 the day before. It opened at $4.80 on the morning of the gap up. Remember, when a stock goes up, puts go down, causing this put to go on sale. But then when the knee-jerk drove the price into the seller, you could have sold that put for $34 and change. That's a 600% return on an at-the-money option with practically no risk. You could have bought the 620 near the money put for $2.80 and sold it as much as $50, which would have given you a 1,600% return. And get this, you could have bought the 600 put for just a quarter and sold it for $31.55 and made a mind-boggling 12,500% profit in a day. That's not 12,500% annualized. That's 12,500% in one day. Knee-jerk profits like this happen all the time. The numbers are amazing. For example, investors showed their disappointment in Intuitive Surgical's earnings by crushing the price $60 on the open. So all of a sudden you could have bought the 380 call for just 50 cents. Right? This was on $44.30 the day before. When the price of the stock goes down, the call options go down. This call went on sale. I don't know about you. Maybe I like it more than my wife to buy stuff on sale. 50 cents. Let's see what it did. Right? Well, before long, the gap started to fill. And you could have made a potentially whopping 2,400% in a day. Again, this is not an annualized number. That's 2,400% on your money in one day. Now, next we have the lemming, right, which takes advantage of the way an event affecting one company often spills over into their competitors. I'll give you a good example in a second, but first I'd like to hear what Jeff has to say.
I came into option trading quite by accident. My older brother, who trades for a living, had an open trade when he landed in ICU, so I called his mentor, Chris Virhay, to see what I should do. The next day I closed the trade with a $20,000 profit, and I thought, wow, this is amazing. 20 years as an executive for Hewlett-Packard had given me a very jaded view of the stock market. If IBM announced poor earnings, our stock would tank, even though our own sales were up, and we had record earnings. It didn't seem right to me. But the way Chris systematically exploits the irrational mood swings of the market gave me a whole new perspective.
Foot Locker and Finish Line give us a good example of what Jeff was saying about the price of a company's stock price being influenced by a rival company's earnings report, this time in a good way. Ahead of their earnings report, Foot Locker calls closed at 10 cents, but on the day the report was released, they opened at 40 cents. So if you didn't get ahead of the report, an 85% gain is the best you could have done. Nice, but not all that exciting, not by win standards. Meanwhile, since Finish Line had no earnings report that day, they opened for the same price as the previous day. Then they proceeded to follow the leader, just like a lemon, up to an exciting 367% profit in just a few short hours. Here's an even more exciting example of the lemming effect. On January 15th, Nu Skin ran into some difficulties with Chinese regulators. So Nu Skin's stock gapped down and proceeded to fall through the floor. If you'd seen the event coming, you could have purchased the Nu Skin $120 puts the day before for $6.59 and sold them for $49 and change and made a nice 655% profit. But what if you didn't see it coming? Right? Is there still a way to jump on the runaway train after the fact? Indeed there is. On the day that Nu Skin gapped down and the price of their puts went through the roof, Herbalife's puts were still only $1.41 at the money and 32 cents out of the money. But being a competitor to Nu Skin, the next day Herbalife gapped down too. Right? The problem for one company by a regulator could be a problem for a similar company with the same regulator. These common problems give us a chance to earn big profits from Nu Skin's rivals as they follow them over the cliff a day later. Tell me it isn't fun to win. The Grand Slam, the Lit Fuse, the Knee Jerk, the Lemming, right? These are all event strategies. I'll send you an email the minute I see any potential profit event in the making. You can count on that. The Lazy Man, on the other hand, is a non-event strategy, and it's perfect for folks who want control of their financial future, but only if it's automatic and no bother at all. Instead of waiting for a big news event, earnings or government report, or even Expiration Friday, with the Lazy Man, you place one non-directional trade soon after the new weekly options are issued, then walk away and let the play out as it will.
I like the freedom of not being tied to a computer, so it's very compatible with who I am. What's important to me is almost every week is profitable. Cash flow that's in the black gives you the freedom to live life on your own terms. And that's what we all want, isn't it?
Michael's right about the cash flow. Even though the Lazy Man doesn't produce the kind of bell ringer profits you get with the event strategies, its average 39% per trade, when compounded, suddenly becomes the tortoise on steroids. Look how, starting with $50,000, one automatic Lazy Man trade a week gives you the possibility of enjoying a generous $300,000 annual income. Right? See how we've withdrawn $25,000 every month? And at the same time, your remaining nest egg could possibly grow into a vast $2.7 million fortune.
Monday, before I go to work, I put on my weekly income trades. And then on Friday, when the weekly options expire, I look for the massive expiration moves. I have a good accounting job, but living in California is pretty expensive, so I'm constantly cashing out. That's the only way to keep up with everything my family needs.
And how about you? What will it mean to you and your family if you win? In this 3-part training series and 2 free downloads, I've given you wealth-building secrets you won't find anywhere else, and I think you know that. And if you diligently follow the steps you've learned this week, you can be well on your way to trading success. Now, the final video will be all about how you can take the next step, and exactly what you can expect when you choose to win. A notice that the last video is posted will be sent to the email address you entered to download How to Win the Jackpot on Las Vegas Sands. So please make sure we have your best email address, the one you check daily, because enrollment will be only open for a couple of days. And if you don't see the notice in time, you'll miss your chance to win. Think how horrible that will be. So what I'd like you to do right now is make sure you've registered your best email address to receive your video, How to Win the Jackpot on Las Vegas Sands. Scroll down, hit the Facebook like button. Everybody wants to get likes. And then please leave a comment. I'm going to go through and read every comment personally myself, and I'm going to respond to as many as I can, so please scroll down and go ahead and leave a comment. And most important of all, be sure to watch your inbox for the notice letting you know when enrollment is temporarily open. Then the choice is yours. So why not choose to win?
Click the link right under this video shown by the blue arrows to get your copy of Weekly Income Now today. Don't miss out. Time is limited.